Ever get paid, and before you know it, your bank balance is back to zero? That's exactly what this person is struggling with. Every payday feels amazing, but within a few days, all the money's gone. No savings, no plan, just guilt and regret. Today, we're diving into a real Reddit story titled, "Can't Stop Blowing My Money When I Get Paid," where the writer opens up about their spending habits and the emotional roller coaster that comes with it. Let's see how it all unfolds and what we can learn from their experience. Should I pay off my student loan early or focus on saving for a house? I'm 29, single, making around $78K a year. I have about $28K left in student loans at 4.5% and around $22K in savings. I rent right now for $1,500/month, no car loan, no credit card debt. My goal is to buy a small condo in the next 2 to 3 years, ideally before rates climb higher. But lately I've been torn between aggressively paying off the loan or letting it sit, while saving more for a down payment. Part of me hates seeing that debt every month, but I also know that real estate prices keep jumping and I might miss my window. My emergency fund covers 4 months of expenses, and I contribute 6% to my 401k to get the match. I can probably throw an extra 1k/month toward either debt or savings, but not both. The emotional side of me wants to be debt-free. The logical side says focus on the house. For those who've been in this situation, what felt better long-term? Paying off loans for peace of mind or keeping them longer to grab a property faster? Let's see comments. Focus on down payment and increasing your income at every turn. I've been watching the YouTube channel I'll Teach You to Be Rich by Ramit Sethi as one of my regular finance education vids, so I'll pose his question to you, and you do with it what you wish. 1. Have you run the numbers of owning versus renting? What are those numbers? Obviously mortgage, HOA, etc. Phantom costs, trips to Home Depot, paint, decorations, or more significant, a special assessment, and so on. And some other things that are probably worth looking into. I will caveat that a condo's ownership costs are far more predictable than a home. I've owned 2 condos, and it was pretty easy. To also include in these calculations is the potential gains that could be earned if you invested the down payment, and maybe monthly savings of renting versus owning, if any. If you have run the numbers and you say, financially, this is a poor choice, but emotionally it outweighs it, then cool, do it. If you aren't emotionally invested in home ownership, then just stick to the numbers and let them guide your decision. Regarding home appreciation, I had my real estate license pre-COVID, and I'll say post-COVID, it's a different market. Everything has changed, and past historical markers are no longer a good measure of what's to come. It's a new Wild West, and who really knows what's going to happen? My personal opinion/observation is that home prices are still overinflated. I also believe that a stock market correction is due, a bubble among other factors, and the housing market will have a dip. That said, I've now been saying something similar for about 3 years. So like I said, who knows? The bottom line, really ask yourself why you want to own a home. As a former condo owner, this is an apartment lifestyle, but you get the equity, if there is any. I'm not shitting on condos. I'm actually a pretty big fan for many reasons, but let's not pretend this is our little slice of the American dream. So if you're looking at this like an investment, just make sure you crunch the numbers to see if it really is the investment for you. What is your opinion? Let me know in the comments. All right, moving on to the next post. Keeping inheritance annuity or cashing out to put into the market. Hello, this is my first post, so be kind and I will follow up and answer as many questions as possible. I have recently inherited an annuity from my father who unfortunately passed away while having barely touched an annuity that he had set up for himself. The total value is $209,000. I was told I will receive $1,800 per month for roughly the next 11 years. This annuity came out of an IRA, so when I get the distributions, it gets taxed as income. My question is, does it make sense to take these payments, or just take the large tax hit in the beginning and invest it in the market. Over the same course of time, it would hopefully double in value. So the way I'm looking at it, if we need the monthly income now, we should take the annuity. But if we can wait, then taking it out and putting in the market will make up for the sizable tax hit up front and then some. I know nothing about this, so I don't know if I'm missing something though. Would there be other downsides to taking the money out immediately? Let's see comments. Did they tell you that you have the option to pull it all out at once? If he had just gifted you the IRA, then yeah, you'd have the option to just pull from it on your terms. But that's not what you've described here. Annuities are usually based on contracts, and contracts have penalties for breaking them. Edit. To put it a different way, your dad purchased an annuity. It's its own thing, so if you want to return it or sell it back to them, that might be an option, but it's not a pile of cash anymore. It's a product on its own. Let me see if I have this correct. So, over the next 11 years, you're going to receive roughly the same amount as what the annuity is worth, minus taxes, of course. Plus, at the end, you're going to receive the total amount of the annuity, which will have doubled in size. If that is the case, then that's a hell of a deal. I would just let the money sit and take the income. 1,800 times 12 times 11 is equal to 237,600. When you take these 1,800 payments, it depletes the annuity. That's why it's roughly 11 years. At the end, you're left with $0 remaining in the annuity. How much do you make? Married? I'm trying to figure out what tax bracket you're in, what tax bracket these withdrawals are getting taxed in, and if you'd incur a large tax penalty for withdrawing, i.e. you're currently in a 12% tax bracket, but withdrawing it. Now would put it mostly in the 24% tax bracket. I would also double-check the timeline. I believe the IRA has to be emptied within 10 years of death. I could be wrong here. You could take withdrawals for 10 years and sell at the end. Furloughed and confused. Hello. My girlfriend is currently on government furlough but is exempt and is expected to commute in daily despite no pay. She's in a position now where we're 2 months unpaid in and her rent is due again. Hoping for advice. Does it make sense to put rent on a credit card, keep draining the checking account, or take out a loan against her life insurance policy? Tia. All right. Let's see comments for this post. I don't know whether or not it's good advice since it hasn't gotten any comments, and I'm a finance newbie. But I just saw a post someone made in this sub of financial options for federal employees. Thanks so much. Agreed with the above that there are a lot of options available for zero-interest loans or payment deferrals, and TSP loans or credit cards should be a last resort after the rest are tapped out. I am also an essential Fed employee currently working without pay, and our HR department sent out a mass list of various resources for us to make it through until pay restarts. She should check in with her HR rep for similar recommendations. If she's a union member, they will also have resources she can access. I'm not saying this is a good idea, just that it is a thing that can be done. TSP loan. Also, for future government shutdowns, she should see about opening an account at whichever federal credit union is appropriate for her agency and having at least part of her paycheck direct deposited there, as many of them offer shutdown loans to those who receive payroll direct deposit there. What sucks is we pulled a TSP loan earlier this year for an emergency roof repair after dropping our savings getting into a dream house. I wish I could pull another just to survive. Okay, moving to the next post. Can't stop blowing my money when I get paid. I'm a young adult and make decent money for my age, but the second I get paid, I'm out here buying whatever I want. Fast food, snacks, and sometimes large purchases. But the second I'm down to that last $100 for the next 2 weeks, I can manage my money without spending a lot. I'm just looking for advice on how to treat my bank account like it always has only $100 in it, so I can stop wasting my money on stupid shit. Let's see comments. Open a second account, direct deposit 20% to it. Forget the account exists. This is actually really good advice. If I just put money into my savings account, I can still see it and end up transferring it to my checking when I need it. Better yet, if you stick it into a Roth IRA or brokerage account and start seeing returns, not only will you be less likely to pull the money out, but all the hold windows kind of give you time to even think about it. I have a Roth IRA and a regular brokerage account on auto transfer every payday, and it's great. I do also follow a pretty tight budget, but it's one less thing I have to think about. Put it into an account at a diff bank without a debit card. That way the transfer will take days, not seconds. My company allows up to 5 bank accounts. Make sure you're earning interest on it though. Open a high-yield savings account, HYSA, if you can, and park your money in there. I keep my emergency funds in a Fidelity brokerage and put it in 3-month treasuries, not the money market account. That way, if I need the money out, I have to sell the treasury, can do that whenever the market is open, wait for the money to settle the next business day, then transfer it to my bank another business day or two. In addition to keeping the money at arm's length, this lets me scratch the itch of doing something with my money, which may also be something that would help you. Okay, what's your opinion? Let me know in the comments. Moving to the next post. Burned out. Want to stop being broke. So first things first, I make $1,800 to $2,100 a month. I get paid weekly, so my take-home is usually around $460 to $500. I live in a town of 600 people. I work at the only store in the town, and unless you farm, there are no other opportunities. In this town, and the nearest city/bigger town is an hour drive from here, and I have no skills, no college degree. I'm tired of living paycheck to paycheck, and I just want some help. Wasn't sure if this is the right place, but I'm taking a shot in the dark. My mortgage is $986 a month. It's a 30-year loan for $120,000. I have no water or gas bills. Electric and my internet are the only real other bills I have, which are like $200-ish a month combined. I am in $8,000 of credit card debt that I pay $230 a month for. That's the minimum. But the interest just eats the payment, so it's almost like I'm not paying it, so I can't use my credit card, nor do I want to. I don't have the time or energy for a second job, much less could I ever find one around here. If I starved more than I usually do, for a couple of weeks I could probably save $100 a month to invest in something. I just am at my breaking point because I need a new roof on my house. I just had to put new tires on my car and pay to get my tag renewed. Christmas is coming up and I want to get my wife and family nice gifts. I'm just tired of being broke. If you think that sounds bad, you are right. If instead of continuing to pay $230 you reduce what you pay each month to fit the new minimum, it gets much worse. The way to get out of it is to pay more than the minimum. Money above the minimum goes directly to reducing your debt, and that means less interest next month. So next month you pay off more of your debt than you did the previous month, and then it snowballs. If you take those $100 and pay $330 instead of $230, you will reduce this 7 years to 3 years 1 month. Still not nice, but much better. Taking the $100 to invest is not a good idea, because paying that credit card debt is far and away the best investment you can make. Short-term investments get you like 2 to 4%. Long-term investments, money you don't touch for like 10 years, can be 7 to 10%. Investments that promise more than 15% are invariably scams, and that credit card is probably costing you 20 to 30%. The only investment you could possibly make that would be better than paying the card would be something that gives you a better paying job. There are some other things one can try to improve the situation with, which aim at reducing the interest rate by getting a new card with a lower rate. But those won't fix the problem, just make it a little better, or maybe worse if you fall into the trap of using the new credit limits. Let's see comments. If you can't afford a new roof, you can't afford Christmas gifts, and I don't mean that in a mean way. There's no shame in that. My family did a few no-buy Christmases growing up where we had to make our gifts for each other or give paper coupons for favors. Honestly, kids usually understand. As for being so pinched, it sounds like you've already cut back basically as much as you can, so the only Solution is either to make more or cut back more. As in job search, find anything more than you make now. If wife doesn't work, she needs to consider it, and maybe external family would be willing to watch the kids while you're both out. If you absolutely can't get anything bigger, can you downsize the home to something smaller that costs less? Kids can share a room. A backyard is nice, but not necessary if there's a park in the area, etc. Best Christmas in my memory was when my family got a 1,000-piece puzzle and we sat around the table all night together and had a great time. You can literally do Christmas for $20 or $5 if you go to Goodwill to buy the puzzle. There's no shame in making it fun little challenge. His other option is to fix the roof and flip the house, but that's a pretty risky bet. If the housing market is good, he might be able to sell it off to another company or person willing to buy it as is. Alternatively, filing for bankruptcy is a decent option from what I'm seeing here. Unless he needs another loan to do work on the house or a new car in the next few years, it's a decent option. I'd consider going to your bank and asking for some financial advice though. Reddit is kind of a crap. Shoot. Either way, paying off that credit card should be your number one, and it sounds like you're gonna need to make a big change to do that. The real fix is income. Every other cut is just rearranging bills until you earn more. It's wild how many of us can relate to that cycle. Working hard, waiting for payday, and then watching the money disappear faster than it came. Breaking that habit isn't easy, but awareness is the first step toward financial freedom. What about you? Have you ever been stuck in this same loop? Share your thoughts in the comments below. Don't forget to like, subscribe, and turn on the notification bell for more real Reddit finance stories every week. Thanks for watching. And remember, it's not about how much you make, it's about how much you keep.